Good afternoon, everybody. Going to go over our Forex trades for today, Thursday, December 3rd. We had one trade, which we were in for about a day and a half, only at 10% of our normal size, which we lost 9.4 pips on a size adjusted basis. We'll go over that in a minute, but first, there's a lot of information we want to talk about this morning. ECB and also Janet Yellen giving testimony in front of Congress on the economy. So ECB and Mario Draghi, amazingly, about 7 minutes before they were supposed to make the official announcement, the Financial Times reports that the ECB is leaving rates unchanged. That started the fuel to the fire to the euro. The euro started to spike extremely hard against the US dollar. The press release that came out 7 minutes early by the Financial Times was completely wrong and inaccurate. They apologized for it later. And the ECB did in fact cut by 10 basis points on their deposit facility rate. So they cut, but they didn't cut as much as the street expected, number one. And number two, the street was expecting them to do a lot more, sort of like a bazooka in a way. And although Mario Draghi and the ECB decided to extend QE until I believe it's March of 2017, they did not increase the size of it. So they cut interest rates lower than expected. They didn't increase QE. They thought, Mario Draghi seriously thought what they were doing was, because they want a weaker euro. So they really thought that this announcement was going to be enough to satisfy the street to get the euro to make the euro sell off, and in fact it completely wasn't. And he tries to cover his behind by saying that QE is flexible and that they can expand it at any time. The street really shrugged it off, and it just made the euro just kept running. I think the euro ran about 350 pips or more from just before the announcement to after the announcement, and then after his speech, because they make the announcement and then 45 minutes later he starts a speech. Some of the takes from his speech, let's see. All right, we know he's extending QE, just mentioned it, March 2017, that's right. He says he will reinvest principal payments and broaden asset buying program to include regional debt. So, but we knew that already. He already said that at the last press conference a month or so ago. So at least he's admitting that they will reinvest principal and interest payments, where the Fed, when they were doing QE, never admitted it, and we've been saying it all along that there's no mandate for them for the Fed to give back the money that they borrowed from the Treasury or to the U.S. government. There's no mandate for them to give it back. So when interest payments come in, when principal, when bonds mature, they just end up reinvesting it. So even though QE, the Fed claims QE is finished here in America, it really isn't, is what we've been saying. Draghi prospects for GDP growth broadly unchanged, but geopolitical risks are broader. So that wasn't very good for their economy. So he was trying to cover his backside by saying a lot of bad things to get the euro to reverse, because I'm sure he was being told what was going on while he was speaking, and it just didn't help the situation at all for the guy or for the ECB. What else did he say here? At first we were thinking that maybe he didn't want a lower euro after all, but then, as I said, as he was trying to cover his behind, and a matter of fact, Janet Yellen, in her testimony this morning, we'll touch base on that in a second, she even admitted that the ECB and Mario Draghi were surprised by the action in the euro. So I found it pretty comical that him and the ECB were so dead wrong on what the market was going to do. And I've been saying it so long. They think they know, right? These central bankers, including Janet Yellen, they think they know what they're doing. And most of them are the highest level guys, right? Draghi, Yellen. most of them, Bernanke, most of them come from academic world. So maybe they worked on a finance business or Wall Street for a short period of time after school. They really didn't cut it, and they ended up going to academies, schools. They became teachers and professors and whatnot. And these people think they know. And what I always say is, if you can't do, teach, right? Or the other saying is, those who can't do, teach. So they think they know what they're doing because the textbooks tell them that this is supposed to happen, but they don't know, because today's a prime example. They expected all the research on Wall Street, from Goldman Sachs to JP Morgan Chase to whatever, is saying the euro was going to be going down today. Matter of fact, Goldman Sachs expected the euro to be trading down 300 pips or so from where it was before the announcement. They came out with their research I think it was last Thursday or Friday on it. They're making a prediction of what the euro is going to do. So even the Wall Street guys are going to be dead wrong, of course, from time to time. But they make their living doing it. Draghi and ECB, they thought what they were announcing was going to be completely sufficient to please the street, and it absolutely wasn't. As we touched base earlier, the euro went the complete opposite direction of what they thought. So pretty funny. Economic news then came out before Yellen started speaking. What did we get here? Let me just find some of it here. Initial jobless claims came out, but that's a weekly number, so not a big deal. Came in actually in line, so not a big deal there at all. Services PMI missed estimates. ISM non-manufacturing missed estimates. ISM service employment missed estimates. So business activity, new orders, employment, backlogs, exports, imports, all announced this morning, all missed estimates, all lower than expected. Not a good sign at all, but the Fed wants to raise rates. Then Yellen, she had her opening remarks, which lasted from, about 10, what was it? About 10 after 10 this morning on the East Coast to about 10:30 for about 20 minutes. Opened it up to QE with the congressman around 10:30 in the morning. And right before we started this video, around 10 minutes or so ago, she was still getting jawboning and getting grilled by the congressman. So some of the things that she said up until this point, the more important things, she said diverging growth around the world boosted dollar. Domestic spending is on solid course. And I find that pretty funny. Domestic spending is on a solid course, she says, and that's just after Black Friday sales disappointed. They were down 10% from a year earlier. So again, another person doesn't know what they're doing. U.S. growth overall is somewhat above trend, she claims. U.S. dollar strength means Fed policy more likely gradual path. Okay, so they're dead set. They're dead set on raising rates in about 2 weeks or so. Yellen, she said we've seen relative weak growth in global economy. Weaker global growth weighs on demand for U.S. exports. Oh, sure, let's raise rates, right? Oh, sure, go ahead. So she's saying that the global economy is slowing and that it's going to weigh on our U.S. exports, but she wants to raise rates anyway to make the economy move even slower. It's almost comical. If she was to say to us, let's raise rates because quantitative easing is a financial experiment that didn't work, and that we need to normalize things for such and such a reason to create good inflation, excuse me, I'd be all on board with it. Completely live with it. Fine, let the market take a little hit, whatever. No, she wants to demand that the economy is so strong here in America that the rest of the world is having trouble. Well, if the rest of the world's having trouble, by us raising rates, we're the largest economy in the world, that certainly isn't going to help the rest of the world, especially emerging markets. From China to, well, I don't know if China's really considered an emerging market anymore, but Brazil is in a depression, for goodness sakes. Whatever, the little bit that they produce for the world, at least for America, but with us raising rates, it's going to get worse for them. It's like being on a bad carousel, The carousel just goes around in a circle, and the music they play is just horrible, And then if you're on a bad one, the music's even worse. Some of the things, the rides don't, some of the horses and stuff don't go up and down. It's just a terrible, terrible time. What else has she said? Fed must look at underlying trends and data. Inflation has been significantly below the Fed goal. Well, we know that. But hey, you know, zero bound rates can't create inflation. Oh, that's fine. It must be something else. And then she comes out and says, she came out and she said community banks are suffering from regulation overload. You know, for all the liberals out there that want all these rules and regulations, she's going completely against them. And then, as I said before, she said market expected ECB actions that didn't happen. So she was expecting, they really, again, she's confirming that Mario Draghi and ECB really expected something completely different to happen. And then she said the last thing that we picked up on, she said labor force participation rate is declining due to demographics. I mean, that's the biggest lie of the day, without a doubt. One other thing, we came across a chart, and you know that we're so negative on housing, and it is just the most amazing chart. I wish I had it here on this computer. Unfortunately, I don't, but we did share it. It shows a chart of housing and real wages and salaries adjusted for, and even the housing sales prices adjusted for inflation. So it's two lines, a black and a red line on a chart, and how they're so tightly correlated. And when the red line, wages and salaries, is a red line, when that's above home sale prices, you know, prices of homes tend to go higher. And then when it's complete opposite, you get a housing bubble. And it's so highly correlated, it's amazing. The chart goes back to the early 1960s. And sure enough, before the last housing bubble around 2007-8, house sales were way above what people could afford. Absolutely crashed. Not only is it now above it, it's above it by a bigger percentage than it was in 2007, 2008 timeframe. So get ready for housing to come in. If you're looking to buy maybe 6 months, a year from now, great. If you bought recently, you might be underwater before you know it. Okay, let's just touch base on this one trade. Running out of time here. We had this one trade in US dollar Swiss franc that we were long. It looked like it was trying to break out of this consolidation. You had this move higher here, you know, and a lot of times when this happens, plus we had our signal, so that even the algorithm got fooled here. And then it just never, that was like the high tick. I mean, literally, I think we bought the high print of the day, for goodness sakes. Not quite, but close to it. And it just never went in our favor. It started to come in a little bit, consolidated for about a day or so. Again, looked like it was ready to pop. Ran into some big sellers up there and just completely reversed, stopped us out. So we only had 10% of our normal size because we were risking up to 100 pips. So we lost 9.4 on it on a size adjusted basis. And then you can see what happened. This is this morning between the ECB and Janet Yellen, the huge sell-off here. So, but that's it. We're going to wrap it up. If you're still trading now, good luck. If you're waiting for any signals, they come out, they'll be coming your way. And assuming we get some action tonight and tomorrow morning, maybe, we'll do another video. Tomorrow is non-farm payroll. So it might be just like this morning, there was so much news flow, couldn't really make other trades to try to make up for this loss and try to, make a dent back into it. Who knows what, tomorrow will bring with that non-farm payrolls. Sometimes it's such a big surprise that it becomes difficult to trade, but we will see. Anyway, have a great rest of your day, and if we don't do a video tomorrow, have a great weekend.